Stop throwing your money away on rent. Watch this short video to find out why buying a home is more affordable than you think. Hi, I'm Blake Davenport with the Davenport Group. I'm a local realtor in the DC metro area, here to share with you short and simple real estate tips. Today we're going to be talking about the differences between owning and renting and why owning is actually a lot more affordable than you think. So in the DC metro area, it's in a very expensive area, not only to buy properties, but to rent. You know, depending upon where you're at, if you're close to a metro, most one bedrooms are anywhere, close to $2,000 and above. The two bedrooms are $2,500 and above. So a lot of people are throwing a lot of money away on rent. And one of the reasons why a lot of people want to buy, we just want to stop throwing away money on rent. We've spent $25,000 plus a year for the last 3 years. That's $75,000. We plan on being in this area. We just want to start investing it. So let's just talk about a little bit the pros and cons of both renting and versus buying and kind of the benefits of each. So when we're talking about owning versus renting, some of the benefits of owning are that the interest rates are at their all-time low. So owning a property is pretty much as cheap as it's ever been right now because the interest rates are even below 3%. Depending upon when you're watching this video, the interest rates will greatly impact your ability to buy a home, but right now they are extremely, extremely low. So buying a home right now is more affordable than you think. 2, appreciation. When you own a home, if say you bought it for $500,000 and in 5 years it's worth $600,000, that's an extra $100,000 that you just earned via doing nothing, versus if you rented during that time, you wouldn't make anything. You would just be paying $2,500 a month for 60 months for 5 years. So appreciation is one of the best benefits of owning. To go along with appreciation, every single time you make a monthly payment when you make a mortgage, part of that monthly payment is going towards buying down or paying down the loan balance and going towards your equity of the property. So if you have, say, a monthly payment of $3,000 a month, maybe $700 or so of it is actually paying down the loan. So that's $700 that you're essentially putting in a long-term savings account. You can't access that money until you refinance and pull money out of the property or when you sell the property. But just each month, you're putting away money into a long-term savings account versus when you're renting, you don't get any of that. Next, tax deductions. Typically, when you own a house, you get to deduct all the interest from the property up to a $750,000 loan, and then you could deduct the property taxes, which is a part of the monthly payment, and your state and local income taxes up to $10,000. Depending upon how big the property is, owning a home is not as good tax-wise as it once was. They increased the standard deductions in 2018, but for a lot of people, you are saving more money each year because you're owning versus renting. I don't want to dive too deep into that, but it's another benefit of owning a home. Lastly, when you own a home, you can make it your own. You can paint the walls, you can redo the kitchen, you can change a fence or something like that and add landscaping, you name it. You can do whatever you want to it, just depending upon the property type. But when you rent, you can't do that, so you can't have that customization. So you don't have to get approval to do something. You can just do it. So it's awesome for those DIYers. All right, so let's talk about renting and why renting would be a better idea than owning. So if you are unsure of your job and this area, that would probably be a reason to rent. If you don't plan on being in this area for more than 3 years or the next 3 years, probably not a good time to buy, just because when you do buy, there's going to be some closing costs associated. When you sell, there's going to be some closing costs associated. So to kind of break even or to eclipse that so you don't lose money, probably a good idea if you're in this property for at least 3 years. Even if you just lived there for a year and then rented it out, that's fine. I just think you shouldn't sell it before 3 years because you probably won't recuperate your closing costs. However, there's a lot of properties in this area that have appreciated a ton over a year that you could very well recuperate in that in a year. It's just on average, I would say you probably just want to last there or live there at least 3 years. And as I mentioned, if you're unsure about your job or you want to change locations, again, probably not the best time to buy. You want to have a strong financial holding when you buy a job, because unlike rent that may last or your lease may end up in 6 months or a year. When you own, you have to make the payments until you sell the place. So make sure that you're financially strong. So if you're not in a good financial position, then maybe renting is not the best place. Also, if you have a low credit score, maybe it's better to rent than buy. However, there are loan programs to get you into homes, but I would recommend improving your credit score while you're renting, and until you get a really good credit score, that's when you should buy a home to get the best interest rate and lowest monthly payment possible. Lastly, a reason why to rent versus own is the down payment or the amount of money to buy the property. I would say if you don't have at least 3% saved to the purchase price, you probably should wait. There are some loan programs, and we've helped people buy with 0% down, but really to get a really good interest rate and a really good loan, I would say you need at least 3% down, just depending upon the loan size. But so for $500,000 property, $15,000. You also have to pay for the closing costs, which are about 2.5% of the house. That's not saying that you can't get your closing costs paid for, but since we're in such a competitive market, it's more tough to do that. So I would just factor having around 5% saved total of the sales price to pay for all of the cost to buy the property. So those are kind of the pros and cons of buying versus renting. Buying a home is so much more affordable than you think. If you're paying over, say $2,000, $3,000 a month in rent, depending upon your specifications of what you want in a property, you definitely probably can find that in a home. Just because the interest rates are so low, monthly payments are so low. For instance, we used to rent a 1-bedroom and den in Boston, and when we moved out and bought in Falls Church, we got a 2-bedroom, 2.5 bath, fully redone, and our monthly payment was like $500 cheaper than we were paying there. So it just depends on what you need in a home, but for the most part, owning a home is so much more affordable than you think. So it's definitely something to look forward to, or look into, I should say. And that's why we have a rent versus buy calculator. So if you input all your statistics, it will say basically, here's the break even. Buying becomes better within 3 years than renting, et cetera, et cetera. So we'll provide a link to that in the post below. So definitely check that out, as it's a good first place to start. Also talk to a lender. They'll give you a very good understanding of kind of realistically what you afford and what your monthly payment would be. That's always, I think, talking to a lender is really the first part of the home buying process. But if you have any questions at all, please let us know. We'd be happy to help. Hopefully you enjoyed this real estate tip video. If you like the content that we produce, if you could give us a like below, that would be greatly appreciated as well. Leave us a comment. Also click the subscribe button or the bell icon to be notified of our next video. But thanks again for checking out this real estate tip on the differences between buying and renting. Bye-bye.